Good afternoon, traders, and welcome to today's daily market review. It is Wednesday the 29th of July, and today we're going to be looking at the stock 3M company. Now, since last Thursday when they reported their second quarter earnings of $2.02 per share, there's been a lot of speculation as to the future direction of the stock, so we thought we'd take a look at it and give you a view on our technical outlook. So in terms of the weekly time frame, the company has been in a steady uptrend since the 7th of October of 2011. Now, during the uptrend, there hasn't been many opportunities to climb aboard the trend. We saw a slight decline during 2014 from the January down to the week starting the 7th of February, and then again we saw another slight decline from September down to October. Now, in both cases the decline didn't last any more than 5 weeks. That is until now. We're currently in a correction which has lasted 22 weeks or 5 months, and lucky for us, this is taking the form of a classic AB equals CD pattern. So as many of you will know from our previous reviews, and those who are familiar with the pattern, the ABCD is a high probability reversal pattern, and what we try to do is look at price areas where the pattern will terminate. We'll then also look at Fibonacci time windows for a specified date or time window for the possible termination of the pattern, and then we will use momentum and then a entry time frame to enter the trade. So we've seen a high of 170.5 this year, and we've seen a decline since then. So we're going to dial down to the daily time frame so we can take a look at the pattern more closely. And from here we can see that we had a rather aggressive uptrend from the 15th of October up to the 2nd of March 2015. Now, since then we've seen a ABCD pattern which currently has lasted around 49 days, and we've identified a zone where the market seems to have reacted. So initially we had 3 identified zones. Our most significant was the 150 spot to 290 at 148.995, and our second was the 147 spot 040 at 145.842. Now, the first zone, the 150.29 to 150.99, was the more significant zone because it has the 100% projection of the AB leg of our pattern. It also includes the 1.272 external retracement of the AB leg. So in terms of the pattern and the price, this will be our preferred zone where we would expect to see a reaction. Now, in terms of time, what I generally do, as you would have seen in some of the past reviews, I generally will manually measure the swings and then project those out into the future using Fibonacci ratios, and then we will look for a time window for when the reversal would generally take place. Today I've cheated and I've used the histogram. What it basically does is it does the same thing, but it calculates it for me. Now, in terms of our current time window, if we look at the histogram, we can see we had on the Tuesday, or yesterday, the 28th July, which is one of the dates which was calculated by our histogram, that we saw a reversal from our zone at 150.29 to 148.99. Now, in terms of momentum on the daily time frame, again we have the momentum showing that the market's oversold. So we have agreement between both the weekly and also the daily that the market should be moving sideways to up for the next few weeks or even days. The second zone that we have is 147.04 at 145.84. Now the market reversed in between the two zones, but the price action has remained in and around our first zone. So as usual, we'll be dropping down to our entry time frame, and here we can see we've plotted the price action from the B point, and we'll simply be looking for a cross of our two moving averages, and then the taking out of a swing high. So yesterday the market created a swing high at 151.72. So if we see a moving average cross and then the violation of the 151.72 level, we'll be entering the trade. Now, those of you who have looked at some of our past reviews know that once we've identified a potential trade, we'll be looking for some kind of support or resistance that may impede the trend once it gets underway. In this case, we've identified two zones. We've identified the area of 155.73 to 154 and 160.72 to 160.29. So if this is indeed a reversal and we get the moving average cross on the 60-minute time frame, we'll be looking to trail our stops in and around these levels to secure some profits or even take them off the table. In terms of our targets, we'll be using the 1.272 and the 1.618 external retracement of the pattern, and those have come in at 176.70 at 184.59. So overall, we'll be looking for further upside on 3M Company if we get the entry into the trade. And then we'll be looking to trail the stops in and around the two targeted levels, so 155, 154, 160, 160.29, and then up to our profit targets of 176.70 to 184.59. Now, one interesting thing I did want to point out is something we don't generally show very often, but one other factor we use is just to confirm the pattern and also the price zones, is sometimes we will throw a Andrews Pitchfork into our analysis. And Andrew Pitchfork is a technical tool that's used very often as a standalone trading methodology. We use it in combination with obviously our pattern, price and time analysis, and sometimes it can just offer that extra bit of confirmation that a reversal or the area of a reversal is a high probability area. And in this case, you can see that the median line is an area that offered support. So not only do we have support at our identified zone, and we also have correlation with our Fibonacci time window, but we also have the median line of the Andrews Pitchfork offering support at this level. So we're looking for further upside on 3M Company, and we'll be looking again for a target of 176.70 as a minimum, as long as we get through the second resistance area of 160.72 at 160.29.